Business Morning. Well, joining me now on phone is Femi Ademola, Head of Research at Bijel Group, one of Nigeria's leading financial services firm. We'll be talking about some of the issues that came to the fore yesterday at the House of Reps ad hoc committee investigating the near collapse of the Nigerian capital market. Good morning, Femi.
Good morning, Esther.
Well, I'm sure you followed some of the, at least most of the proceedings yesterday, where we had the NSE Chief Executive Officer Oscar Onyema taking the stand, talking about some of the factors that he feels led to the near collapse of the capital market. We also had a presentation and a question and answer session with the SEC DG and, of course, the NSE CEO himself. Just give us your thoughts on yesterday's proceedings.
Well, I think what we saw at the capital market probe is quite very profound. The manner, the approach, the way it has been going on, I think it's a very wonderful thing, a very good, could be very, very lauded. Now, the thing about what we've been hearing about the near collapse, it is not that very new, like I said the last time. The only thing about it is that it is now more transparent. It's giving more detailed information to the public and people now know why. Again, I spoke yesterday to somebody and I said, at the end of this probe, what we expect is not to look for a culprit, but to be able to correct the past mistake. You would see the manner of where they have even held on to the regulators, tell them the rules that are supposed to play and what they play. I think what is coming to the fore again is the fact that the regulators need to work together. They are working in silos. A situation where the CBN will be saying that we are only protecting the depositors and the SEC will not be able to protect the investors to a large extent. I think there should be a kind of synergy among all these people. That's one good thing that is coming out from the door on this thing.
Now, Femi, sorry to butt in. Let's talk about some of the issues that were brought up yesterday, starting with the NSE Chief Executive Officer, Mr. Oscar Onyema. He was taken up on the issue of demutualization. Now, it was a question from the chairman of the committee, Mr. Ibrahim El Sudi. He says that he's gotten some letters or some comments from concerned individuals about the fact that many people still do not understand the demutualization process, that even perhaps the NSE itself does not even understand what, the whole demutualization process is about. Could you just throw more light on that for us?
Well, again, the issue of demonetization, a lot of people have been talking in support of it. Well, like you said, some people are talking about the concern. I think what we need to do now is to just try to enlighten the public about what it is. What demonetization is all about is that we want to make NSE a private institution. It has to be it has to be owned by investors who have private shares in it, rather than being being by trust or guarantee as it is right now, where you have it partially government owned, it's a kind of group of people doing it. We want it to become a private company, or let's say a public company that will be quoted on the exchange, and people can have investment in it, and it become like a public entity on itself, and
How much benefits would that be to the exchange of, to the market itself, since there's so many calls for it to become no longer become a privately held company?
Yeah, the thing about it is, everybody believes that if it is done in that way, then there could be question of transparency that could be asked, like what is happening to the banks now, that you are asking direct questions, you are telling them that they should put corporate governance in place, they should be more transparent about the accounting and reporting. That's the same thing with NSC. A lot of things is being shrouded in more of politics and secrecy that people don't know anything about. We want to be able to vote in the directors rather than have some governing council that's running it, because like a government institution. So let it be a public, publicly owned institution, not government owned, but as a privately owned, but with investors from the public investing in it. And therefore, they can fire and hire their chairman, they can fire the MD, rather than call the NSC Director General, will be called a CEO or MD, like a normal company. That is what the issue of demonetization is all about. It's about just demonetization. Let it be run as a profit-making entity, and not waiting for government subvention or whatever to run the organization. That's practically what demonetization is all about.
Femi, okay, if it's going to be thrown open to the public, what about the stockbrokers? Can they also have a stake in the NSE?
Yes, they can. Even right now, I think they have a stake already anyway. But the thing, as a group, they have a stake. But the thing about it is that individuals can have a stake. I can buy, you can buy the shares, because it's going to be on the exchange, and anybody can invest in it. And the shares will be traded on the exchange, just like the shares of First Bank is being traded, just like the shares of GD Bank is being traded. So what we are saying is, you can buy, I can buy, and it could be tradable at any point in time. You can sell your share. You feel that the way it's being managed is not okay for you, you sell off to buy, or you see opportunity in some other things. So that is what democratization is all about.
Another issue that came up yesterday during the presentation of the NSC CEO was the issue of the Sovereign Wealth Fund. He said that that is a fund that could help bring some kind of stability to the market, will help deepen the market. But he also said that contrary to widespread belief that there's so much people think that the NSC is not deep, or the market is not deep enough to absorb very large funds or large companies. Do you share that sentiment also?
Yes, I think it's very right about that. The Sovereign Wealth Fund, when it is created, it has to be invested. And a part of it has to be started in the local market. This investment is expecting that would be to be invested on public quoted companies. If that happens, it gives more capacity for investors to go to market and seek investment to be invested in. Now, that might also attract some big corporations to come and list in the market once they know that there are actually enough liquidity to buy all those shares. To cause trade to flow on those shares. We've been talking about how we get the likes of all these multinationals, the telecoms, the oil and gas, upstream companies to come and list on the market. But again, the question would be, do you guys have that liquidity for the market to be able to operate? But when we have a sovereign wealth fund that has $2 billion that can be invested locally, then it gets the market and making it deeper. I quite agree with that, that it is a positive direction that helps the market.
Okay, another issue that came up yesterday, quite a sensitive one, about the NSE Council, the fact that out of the 19 members, 8 of them were nominated and put there by the Securities and Exchange Commission since the intervention about 2 years ago. They're still there, and members of the committee said that it's not a normal, well, it's not according to international best practices. And Mr. Onyema himself actually said, yes, that it's not normal, but given the present circumstances, the amount of market infractions, the way the market came down, that SEC felt that it was necessary to appoint those 8 members and then leave them there up until now. What are your thoughts on that?
Well, again, it's just about the kind of intervention that I've seen in various sectors, like in the banking sector as well, and CBN having to appoint directors, MDs, and even some executive directors into most of those banks. Again, it is to stabilize the market. It is to ensure that the platform is running well the way it is supposed to be run, and then everything will be fine. However, like we said, the best way for it to go is make this company, make it a private company. I mean, what is no more in the hands of government or guarantee or even SEC being directly involved in the management of that place, we can see so many other things happening. And then we can vote in our directors and remove them if they are not performing. So I think right now, it is a good step in direction to stabilize the market. But again, every step you take, there's always going to be some misgiving. But the best thing is, does it make sense right now? I think it does. The only thing is they shouldn't overstay. As long as the work is done, the steps they are supposed to take, the place is stable, they should go and allow the constitution, or let's say the article of action of the company, to put who's supposed to be managing it in the government council of directors to be there.
Also, yesterday, Femi, the NSC CEO, during his presentation, listed out a number of measures, government-backed measures, he called them, and proposals by the NSC in terms of to revive the market deeper. He mentioned tax holidays for companies. He mentioned the new listing rules that we've seen. He mentioned the Sovereign Wealth Fund. He mentioned the pensions administrators bringing more money or liquidity to the market. But a few days ago, I had an analyst here, and he said that we need to address deeper issues. He mentioned the fact that, when the CBN came, the members did not take the CBN up on how their monetary policies in the last couple of years have been actually affecting the capital market. He mentioned the fact that the MPR rate is still high at 12%, the fact that the money investors feel it more profitable to go into bonds and treasuries that are giving out interest rates as high as 16%. He talked about government sovereign bonds, 3-year, 5-year bonds, with coupon rates as high as 16%. So he's talking about the fact that that's also causing liquidity issues for the market. Do you think perhaps the CBN should also be invited back to look at these issues?
Yes. I mean, in very long time, we have been discussing and talking about the issue of the interest rate environment and how it affects us on the equity market. Clearly, most of these monetary policy are anti-equity market. But I think it is deliberate, because if you look at it from either the action or the statement that come from that authority, it is clear that they wouldn't want the authority doesn't want the equity market to actually rally so much. Because
no, Femi, why would you say that, Femi? Because at the end of the day, fiscal monetary policies, they're all working together for the good of the economy. Of course, we do know that right now, unfortunately, the capital market is not reflective of the Nigerian economy. We still have our structural, imbalances. But for you to now say that you don't, the monetary authorities themselves may be working or putting out policies that are working against the capital market, do you think it's fair to take that stance?
It's been happening. It's not only the fact that monetary authorities might be working against the capital market. Like I said earlier, even all the regulators have to work together to make sure that they have unity of purpose, and whatever things they want to do before it becomes public, they've considered the fact that they have to every other person before they do it. In the first instance, like I said, the actions, okay, imagine the only target of the monetary economy is to make sure that the inflation does not go up. They only just to make sure that at the end of the day we have positive return on the fixed income instrument. As long as you have to have positive real return on those instruments, the equity market always over. What do I look at the developed market when we have the yield on their own bond market is a negative real yield. It's only the very long one of 20, 30 years that have positive real rate. So if we are giving them positive real rate here in Nigeria, they will be coming here. And that's what you see everybody coming to the fixed income market at the essence of the equity market. So some of this monetary policy is actually anti-market. Maybe not deliberately because what they want to do is to fight inflation. But look at it. We're having high unemployment rates. We're having high incidence of poverty. It has some effect. Now, what we are saying is that they should work together. Like you said, the NSC CEO came yesterday to be talking about how the pension sector will help the equity market. But again, there is a PENCOM, a pension commission, that drive and give rules about how the PFAs can do, what they can invest in. They need to talk together. The NSC cannot do anything on its own. The PENCOM have to approve that, okay, some of these things be directed to the equity market and try to give incentives to make them do that before it can be done. You know what I'm saying? So right now, the PENCOM said no asset of the PFA can be lent for any purpose, right? What is the asset? They mean investment in the equity market investment or bond market investment. Now, the NSC want to create market making. Who will need security lending to be able to facilitate their work? If they cannot borrow from the PFA to do their market making work, it may not work properly. And those are the kind of things that we need to work together to be able to harmonize. So the monetary policy, the fiscal authority, they have to sit down. If fiscal authority is truly doing the fiscal consolidation that they said they want to do, then there won't be any need for monetary authority to be increasing interest rates every now and then. And you can see now, since the beginning of this year, we have a kind of stability in the MPR, as in increase at every meeting like they used to do before. And that might have been affecting the positive thing that we've been seeing on the equity market. As long as interest rates continue to go up, the equity market will not be as attractive as we want it to be. And that is it. So it's a very key thing. We need to come together, but not just call the CBN and say, come and talk about this stuff. We need to call all the regulators together that anytime you guys want to issue things, you should consider everybody before you just come out with your own policies.
So, Femi, you're saying all the measures taken in the last couple of months by the NSC, the new NSC authorities, the market making, restructuring of the market, calling on the PFAs, new listing rules, the fact that they're relaxing some of the rules to encourage perhaps small and medium enterprises to the market, new listing rules and some other investor-friendly rules, as it were, to expand and deepen this market. You're saying that if at the end of the day, the other authorities who have a stake in the market, if they don't all work together, none of these rules or none of these measures rather will revive the market or take it to where we would love it to be.
Not exactly. The thing about it is that there are some that are directly responsibility of the NSC to do. For example, the relaxing of the listing rule is there, yes. The expansion of the market through bringing in some other product like the exchange rate fund and other derivatives that they are thinking of bringing, that is there. But asking the PENCOM to come and invest in the equity market, they can't force it. So they need to work with the PENCOM to get some things that will make the PFA to want to do it, apart from the fact that the market is attractive to them. That's what I'm saying. Now, if the interest rate environment is high and you can make some good profit from the fixed income market at the short time, even with treasury bill, so why should you go to the equity market? So what I'm saying is there are all those things that they are talking about, all those steps that the NSC wants to help the market, that is not within its power. And we need to work with other regulators to make that happen. That's what I said.
All right, thank you so much, Femi. We really do appreciate your contribution being on the program. Thank you so much. I have been talking to Femi Ademola, Head of Research at BGL Group, one of Nigeria's leading financial services firm, and we have been looking at some of the issues that were brought to the fore yesterday at the third session of the House of Reps Ad Hoc Committee investigating the state of the Nigerian capital market. We'll take another quick break now, and we'll be back with the rest of the program. Please stay away. Welcome back to Business Morning. The House of Representatives Ad Hoc Committee investigating the near collapse of the Nigerian capital market will meet again today in Abuja to continue with proceedings. Yesterday, they had the Securities and Exchange Commission Director General, Ms. Aruma Ote, and the CEO of the Nigerian Stock Exchange making presentations and answering questions on some of the issues that came up yesterday. Now, let's play back some of those presentations, particularly that of the NSC, the Securities and Exchange Commission Director General, Ms. Aruma Ote.
Honorable Chairman, honorable members of the Ad Hoc Committee, let me start by thanking you for giving SEC the opportunity to make this presentation to you. While our submission is very comprehensive, what I would like to do is focus more specifically on the areas that have not been focused on as much since the 17th of April, when the public hearing on the capital markets by the Ad Hoc Committee started. I also believe that given how much time you have dedicated to this initiative, that I need to respect your precious time. And so in this respect, I will try to cover more deeply the areas that have come out in the course of the hearing, which you had asked us in the course of the hearing to also take note of. So I will speak to the notes that I have. I will focus specifically on something that has been a theme that has cut across all of the presentations, which is your question: what is really fueling the residual domestic investor apathy? You have also asked for what it is in the course of the session to other stakeholders, what it is that the SEC has done. I will focus on some of what SEC has done in the last 2 years to rebuild our markets. You have also asked for a presentation on areas where you can help as a legislature as we work together to build a world-class capital market. Let me start, therefore, with the areas that I feel have not been covered as specifically as it should be with respect to issues around investor confidence or domestic investor apathy. The first that I would like to cover, which also in your discussion with the CEO of the Nigerian Stock Exchange you focused a lot on, is the reasons for the SEC intervention and describing the SEC intervention starting in August of 2010. As you know, a stock exchange is one of the most visible symbols of any capital market. It must therefore exhibit the highest levels of good corporate governance, fairness, and accountability. When I joined the SEC in January of 2010, my colleagues handed me briefings including an inspection report of the stock exchange that they had undertaken in September 2009. The findings of that inspection were shocking to me and included weaknesses in corporate governance, weaknesses in risk management, weaknesses in internal control, insufficient oversight of brokerage firms and listed companies, inability to enforce rules. The inspection team also found that more than 2,700 investor complaints lodged with the Nigerian Stock Exchange had yet to be treated. These complaints range from unauthorized sale of shares to withholding of proceeds of sale of shares. The team also found that the Nigerian Stock Exchange Investor Protection Fund was not being properly administered. The report also highlighted a number of financial mismanagement issues, including huge amounts spent on a construction project that was yet to be completed many years after inception, including the inability of the stock exchange to perfect the title of a key asset, the headquarters building. There were also observations related to the significant growth in assets and the significant growth in expenses. It was brought to my attention that there were incidences of financial scheming, misappropriation, false accounting, misrepresentation, and questionable transactions. For instance, the Nigerian Stock Exchange bought a yacht, or should I say boat, for 37 million naira and wrote down the book value within 1 year by recognizing it in its books as a gift presented during its 2008 Long Service Award. Yet, there are no records of the beneficiary. The stock exchange also spent 186 million naira on 165 Rolex wristwatches as gifts for awardees, out of which only 73 were actually presented to the awardees. The outstanding 92 Rolex watches, valued at 99.5 million naira, remain unaccounted for. These were the kinds of financial imprudence that were perpetrated at the Nigerian Stock Exchange. These transactions were often routed by companies owned by some senior officers of the exchange at that time. In 2009, 1.7 billion naira of the 2008 operating surplus was distributed to council members and employees in violation of CAMA and SEC rules. This happened in previous years. Other notable fraudulent transactions include the reclassification of the sum of 1.3 billion naira originally expended on business travels. Of this sum, almost $1 billion was reclassified under software upgrade and subsequently expended as against being capitalized. There were other cases of unethical accounting practices. There were a number of related party transactions, including sums that amounted to the millions of naira. And I'm just highlighting some of the unethical accounting practices that were observed and communicated to me. Given the foregoing, it was important for me that we engage the Nigerian Stock Exchange to address these weaknesses. Unfortunately, the former CEO of the Nigerian Stock Exchange did not attend most of the meetings we scheduled. Given that lack of interest, we decided to focus on what we had been told was a key aspect of the stock exchange's transformation agenda, and that was the selection of a new leadership team. Even that was fraught with a lot of failed promises, and we had been promised that this process will be completed in June of 2010, but nothing credible had happened until after the SEC intervened in August of 2010. Let me say that this was something that was probably a number of people in this country were very much aware of, including some of the owners of the exchange. Because from January to July 2010, I received several complaints about the exchange having serious financial difficulties arising from undisciplined spending and imprudence. A number of the complainants indicated that they were concerned about an imminent bankruptcy of the Nigerian Stock Exchange. That concern was reiterated in a letter dated 21st July 2010 that we received from a council member who indicated that unless something was urgently done, that the Nigerian Stock Exchange would soon face bankruptcy. A number of stakeholders had also reported these concerns to the SEC's supervisors, and in some cases were already alleging that SEC was unwilling and unable to intervene despite its powers to do so, and the grave circumstances that the visible symbol of our capital markets faced, the Nigerian Stock Exchange. As you know, this was widely covered in local and international media and culminated in BBC television running on the hour during its prime time international news bulletin about the imminent bankruptcy of our Nigerian Stock Exchange. Let me also refer to some of the earlier comments, in my own words, that the CEO of the Stock Exchange made about the inadequate oversight at that time by the Council. The SEC inspection report observed serious oversight lapses with respect to the Council of the Exchange. Let me cite a few examples. Important committees, such as the Risk and Compliance Committee, had last met in 2007, while the Disciplinary and Rules Committee had last met in 2005, 4 years prior. There were also multiple litigations. Notable amongst them is the one related to the purported elections held on the 6th of August, 2009, which election was subsequently declared a nullity by a court of law on 12th of March 2010. There were also, of course, most of what I have talked about, I have not been specific about some of the non-compliance with the statutory requirements of the Investment and Securities Act. But I'd like you to know that the exchange failed to submit its 2009 audited financial statements by 30th of June 2010, 6 months after the end of the period as required by the ISA 2007. Let me now focus, having highlighted the context within which SEC intervened into the Nigerian Stock Exchange. First, in addition to violating the ISA, you will agree with me that these developments undermined market integrity and significantly eroded investor confidence. As a consequence, and by virtue of the powers vested upon SEC by sections 13, 35, and others, the SEC intervened to safeguard the interest of the public and asked the NSE leadership to step aside in August of 2010. As Theodore Roosevelt said, in a moment of decision, the best thing you can do is the right thing. The worst thing you can do is do nothing. I believe we at SEC chose to do the right thing. SEC then appointed an interim head of counsel and an interim administrator to stabilize the exchange, as well as coordinate a credible and auditable process for the selection of a new leadership team of the Nigerian Stock Exchange. The interim administration ensured that the exchange complied with the statutory requirement of submitting the 2009 financial statements, and this was done on 30th of September 2010, less than 2 months after their assumption of office, and after due process, including a review and an approval by a council. A review of the accounts revealed that the external auditors gave a qualified audit opinion. The qualification was an account of the distribution of an accrued sum of 1.2 billion naira to employees and council members as bonuses and share of surpluses for the 2009 financial year. The SEC also launched a forensic investigation to examine the allegations of financial irregularity and mismanagement. While these investigations have been concluded, the results are unavailable because the former CEO of the Nigerian Stock Exchange and 3 other former staff have an injunction against releasing the report. The interim administrator stabilize the exchange, and amongst others, commence steps to replace the trading platform with a more efficient and robust system, and successfully coordinated the recruitment of the new leadership team, who assumed duties starting in April 2011. At that same time, and pursuant to Section 35 of the ISA, the SEC in April 2011 directed the exchange to admit some independent professionals. That issue was one that you discussed extensively with the CEO of the stock exchange. So I'd like to provide some input to that discussion, or some clarifications. This was really to strengthen and professionalize the council. And this is an understatement, what I've just said. The public interest members have brought independence and useful professional perspectives covering law, accounting, listed companies, pension fund administration, macroeconomics, and market analysis.
The Director General of the Securities and Exchange Commission there, Ms. Aruma Ote, giving her thoughts on the conduct of the previous authorities of the Nigerian Stock Exchange. She mentioned quite a number of things. She talked about weakness in corporate governance, internal control, apathy towards investors' complaints. She said Investor Protection Fund at that time was not being properly utilized or administered. She also said that there were gross incidences of financial misappropriation, fraudulent accounting and transactions. She said that she believes that the developments at that time undermined market integrity and, of course, led to investors' confidence just nosediving at that time. So those are some of the things she highlighted yesterday at that particular presentation. Of course, we're expecting more presentations today as members of the ad hoc committee investigating the state of the Nigerian capital market meet today at the nation's capital in Abuja. Of course, Channels Television will be tracking that event for you live. Let's go over now to our earnings board. Let's take two earnings that came out yesterday, one from the oil and gas sector of the market. We have Eternal Oil, its first quarter results for this year. A turnover came in at 41.2 billion naira. That's a whopping increase of 974.8%. Profit before tax also went up 7.6% at 605.6 million naira, while profit after tax also came higher, up 7.6%, also at 605.64 million naira. Net assets are also up at 6.4 billion naira. That's a 10.4% increase. We also have one from Oasis Insurance, one of the insurance companies listed on the exchange. It's the first quarter results for this year. Gross premium came in up at 12.2%. That's at 840.7 million naira. Profit before tax also went up 23.4% at 267.1 million naira, while profit after tax also came in positive, up 24.6% at 252.9 million naira. Net assets are also up at up 7.1% at 3.8 billion naira. Let's also quickly check with the financial market indicators for yesterday, talking about the cost of lending among banks adding to bank market. We saw rates edging up yesterday across the board for both the short-term and long-term money. For core money, it closed at 14.3%. Now, for the secured open buyback instruments for the banks and discount houses, we saw rates coming up back to 14% from around 13.3% previously. And at the currencies arm of the market, that's talking about the interbank foreign exchange market, we saw the naira ending slightly lower against the US dollar yesterday, closing at 157 naira 35 kobo to the dollar. We also saw the CBN, the Central Bank of Nigeria, at its first foreign exchange auction for the week, selling dollars worth about 120 million. Well, that's about all we can take on today's edition of Business Morning. Thank you so much for being a part of it. Don't forget that the Senate House of Reps ad hoc committee investigating the capital market will be coming up very soon. We'll be bringing you that event and, of course, tracking that for you and giving you the proceedings as we get them. That's about all we can take on today's edition. Thank you so much for being a part of it. Channel's news track is at 11. I'm Esther Butaga. Bye for now.